Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, so not a busy week for us in terms of reports. However, it was a very busy week in terms of hearings as it relates to cattle markets. 2 days, 9 hours. Maybe more than 9 hours. I'm not quite sure. I think I lost track. And we're going to talk a little bit about that coming up. And we're going to also kind of circle back to the cattle on feed report numbers that we talked about last week as well. But to kick things off, let's recap what happened this week in the markets.
Yeah, so not a lot of great news this week in the markets. We start on the cattle side. Fed cattle were 30 cents higher this week. The bright spot for us. Feeder cattle were 2 to 3 lower this week. When we look at those futures contracts, the June live cattle futures contract closed down $5.50, and the May feeder cattle contract was down $7 this week, partly, I think, due to what was 26.5-cent higher May corn futures on the week. We also lost on the box beef value. The choice box beef value lost 6 1/4. That now puts it nearly $30 below where it was a year ago at this time. So not such good news there, as we had weakness across the board and all those components in the box beef side. On the hog side, the cash barrel and gilt prices were $1 lower this week. The May lean hog futures contract tumbled this week, down $11. The pork cutout value was also down nearly $4.20. That actually now moves it below year ago levels as well, down $4 relative to where we were a year ago. Belly's weakness was really what drove that pork cutout value lower this week.
And bellies, I mean, really kind of took a hit overall. Really, it just, everything seemed to take a hit day after day after day. When we take a look at that, we saw the announcement this week about E15 and summertime E15. Did that help provide a little support on the corn side of things as well?
Yeah, so I think it has, as well as we're seeing China decide to keep buying some U.S. corn, and I think both of those things have been important to keep moving corn prices higher. So we're going to have to watch what happens here over the next few weeks on the livestock side of the equation, because we know we likely are going to get some higher feed costs, it looks like, given where we've been going on that side of the equation. So maybe more risk, more concern than we've seen, as we're getting a break in livestock prices moving lower, yet no real break in sight for feed costs.
How much too are we watching the planting delays, and is that also putting some pressure on input prices for livestock producers as we continue to move through 2022?
Yeah, so perhaps it is. I think the recognition that we need a perfect crop to try to grow ending stocks is on the minds of many. So anything that potentially puts that at risk, I think, has kept feed costs higher than otherwise might be the case.
Let's talk weekly slaughter numbers. How are these shaping up in comparison to where we were a year ago?
Yeah, so if you look at cattle slaughter for the week ending April 30th, 656,000 head of cattle. That's down 9,000 from a week ago, but 3,000 above where we were a year ago at this time. On the hog side, a run of 2.403 million head. That's 29,000 head above last week, but 39,000 below where we were a year ago.
The big report. I guess we should probably talk about where we are in comparison percentage-wise year over year for both beef and cattle. I'm getting really excited about talking about some of this other stuff.
Yeah, you just want to get beyond this, right? So when we look at the percent year to date, so cattle slaughter up 0.5%, pork slaughter down 5.7% year to date. So a little, again, continued this little different story of a lot tighter hog supplies. As we think about hogs and pigs report, fewer sows. I keep hearing some issues related to PRRS still percolating in some parts of the country. To me, all these things say we're going to stay really tight in terms of hog slaughter here for a while. So it's different than on the cattle side, where we are finding more animals than maybe we thought, and slaughter running above year ago levels year to date.
All right, let's talk Restaurant Performance Index, the only report this week, before we head into some of these other topics.
Yeah, so not a lot of information one way or the other in terms of Restaurant Performance Index. The March 2022 index came in at 103.7. That's just down a tenth from where it was in February of this year. When you look at the current situation index, it was basically unchanged month over month, while the expectations portion of the index fell just a tenth. So really not any, no negative news there, I guess is the way I would frame it, but also not anything that makes us get too excited about where we're going as we look ahead.
No news is good news.
It very well might be. We need to keep this demand side going, and maybe that's really what we got out of this report is more of the same, which has typically been strong demand.
All right, cattle hearings today, Senate on Tuesday, House on Wednesday. For as maybe as boring as the Restaurant Performance Index was, those hearings definitely included some fireworks. As you look back at them, and I know you monitored as well as I did, as much as you could both days, what do you take away and what happens? Let's start there. What do you take away?
I take away there is no consensus to be had in trying to figure out how to deal with cattle markets. Clearly, there are multiple ideas of ways forward, none of which have consensus. Which I will say I see both sides of this coin a little bit of some saying some saying they don't trust markets today, while others might say markets are working, that yes, we're doing less cash trade in some parts of the country than we did in the past, but that's just the natural evolution of the market, not that there's fundamentally anything wrong. I don't think either side is interested in compromise.
I would agree on that point. That's probably the only thing that I think everybody came out of those hearings with an agreement, as that there's not one, their way is the right way, and there's not a middle ground anywhere. As we look forward, what happens to some of those other titles and some of those other pieces that they're working on to increase competition? I think about the cattle contract library, looking at the A+ Act that was introduced, I think, on the House side of things. How do those help in the competition standpoint?
Yeah, so I think the cattle contracts library is one of the few places where we do see most everybody saying that would be nice to see. I think more information about how cattle are being traded in terms of fed cattle supplies, I think is helpful to this discussion. I sometimes think that there are those that feel like there are issues with not all of contracts being reported appropriately, or that there are these sweetheart deals, if you will. Getting clarification about that, and I'm not trying to say there are or there aren't, but getting clarification about that through the contract library, I think is a good strategy. I'm not sure though that we're at a point where everybody's going to be ready to peel off and just do a cattle contract library and call it good. I don't think we have that kind of interest, probably from either side, frankly, right now of this debate.
I guess my next question is, then we know this isn't over, and it probably won't be concluded anytime soon. Do we just anticipate more discussion, and do we hopefully find at some point some middle ground to make sure that those who are struggling can have an answer? Yeah.
So I think there's short and long run here. So I'll say, to me, the long run is this issue does not go away. If we get no legislation one way or the other, I don't think it goes away. I think that the conversation continues. I will say here in the short run, we're going to figure out whether we're going to see floor time on any of these bills. And I'll remind everyone that this is all going to come down to, is there 218 on the House side and 16 on the Senate side to move something forward? And if the answer is yes to both those, we might get standalone legislation. There's just not that big a window of time left on the legislative calendar to get something done this year. I sometimes look ahead to the next farm bill and say, I wonder if there won't be a competition title or discussion of a competition title in the next farm bill that continues this discussion, with the farm bill being maybe more of a vehicle to be able to move some type of legislation forward.
Scott, as we wrap up today, we had a question come in this week talking specifically about what role beef dairy cross feeders play in placements. Talk to me a little bit about how that relates and what that does in the long term.
Yeah, so it is a great question. You know, we're getting a lot more beef semen being used in the dairy industry, at least if you pay attention to the data provided by some of those in the some of the AI companies that are out there. I think this has been a trend that's continued over time. Technology has moved us immensely in terms of the dairy industry. So now I can figure out which of my females I want to get a replacement heifer from and use sorted semen on those animals. And those cows that I really don't want a female replacement from, those steer calves with beef semen certainly have a lot more value. And so we're seeing a quick ramp up there. I think it is important for us that might be coming more from the beef cattle side of this industry to not forget what's happening. We're growing more feeder cattle that are these beef on dairy crosses that I think add additional numbers. Now, I will say this isn't a slug, it's a continuous change. I think of it as we're going to keep seeing measured relative to the beginning beef cow inventory, more beef production. And it's going to have been coming from that beef on dairy portion more than maybe anything else right now. So we're going to continue to have more animals than we might have thought otherwise on the beef side, just because of what's been happening. It's a great opportunity for those in the dairy industry to try to add value. You know, all the time when we think about everything that we produce in agriculture, we're trying to figure out how to take what might in the beginning have been a waste stream and turn it into a value. And those dairy steer calves, although not exactly a waste stream, didn't have a lot of value to them. So now we're figuring out a way to add that value. It's no different than what we might be doing with manure out of pits, right? Or DDGs from the ethanol production, or offal products from carcasses of cattle and hogs. All those things, the more value we can get out of the pieces that at one point might have been throwaways, the more value for the overall animal. So I see a lot of that happening.
It'll be interesting to watch that trend as well. Scott, as we look ahead to next week, what reports do we have?
Yeah, so we're going to get monthly trade data. It's going to be interesting to see what we get out of there, especially related to China. A lot of discussion about China shutting down and what's that mean for trade in ag products. And then we finish next week with a jobs report.
Sounds great. We will talk to you next Friday.
Have a great weekend, Megan.
You too. To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And for all the great podcasts while you're hopefully in the tractor, doing some planting this spring, go to brownfieldagnews.com/podcast. And you can also check out our counterparts, Ben Brown and Will Robinson, with the weekly commodity market update, which comes out Tuesday afternoons. Have a great weekend. I'm Megan Grebner for Brownfield.